This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is February 24th, 2021. This is show number 212. And Nick, quite a day yesterday, eh?
Yeah, yesterday was a wild one on Wall Street, without a doubt. We had that early sell-off. I mean, it was a big decline. But like we talked about, you have to see how the markets close. And, really the markets had an incredible bounce throughout most of the afternoon. We did get a little bit of late-day selling, but for the most part, it was a big recovery after that big flush. And right now you have technology. That seems to be the weak link. We are seeing strength in the small caps, in energy, also transports and financial stocks are holding up really, really well. So that's where the strength is in this market.
So what's going on with energy? I mean, there's a huge migration of dollars into energy recently, isn't there?
Yeah, we've had a great run in oil. You got to remember the Keystone Pipeline probably set this off. It actually started ahead of the, I would say right around the election time when President Biden was elected. Energy really took off to the upside. I thought crude would go higher. I did not think the energy stocks would act this well, but they've been absolutely on fire. They've been on a tear. I've missed this whole move, but you're looking at, crude oil now sitting at almost $63 a barrel. So it's gone up quite a bit. You could probably see when you go to fill up at the gas pump what you're paying for a barrel, for a gallon of fuel now. It's north of 250. Some places 260, 270. So oil has gone up. Energy stocks have really followed suit. They've just been exceptional.
Hey, well, I guess when you see Exxon start laying people off and talking about cutting their dividend, it's a great contrary play. I mean, remember that theory, Nick, the dogs of the Dow?
That's right.
It seems to be proving true here, doesn't it?
Yes, it does. It does seem to be proven true. A lot of this has to do with the anticipation of reopening, right? So everybody's out there thinking, airlines are going to get back on track. They're going to start flying tons of people. Hotels are going to start filling up. So everybody's looking at the so-called reopening play, and there's a lot of validity to that. The problem we're seeing now is twofold, in my opinion. You have interest rates going up. They're starting to move up, and that's going to crimp the spending style of a lot of people. And you're also seeing, huge moves in copper. We've talked about that endlessly here. We're seeing aluminum prices higher. So things that you use and need are actually becoming more expensive. Food prices are becoming more expensive. So something has to give. Obviously, gasoline prices are becoming more expensive. So does that slow down the consumer? So, we'll have to wait and see. Right now, yesterday with the sell-off, we did see Jay Powell testify on Capitol Hill yesterday in what we used to call the Humphrey Hawkins testimony. And basically, he just said he won't stop printing money until the country gets back to full employment. Now, how long does that take? Who knows? But, we've got a long way to go before we get back to full employment.
We might be at full unemployment if they keep this up, Nick,
Well, I have to say, it's rather remarkable, but the markets want easy money. That's really what they're addicted to. That's what they like. Even today, the markets were struggling a little bit before Jay Powell got on the TV today. He's testifying again, his second day. I believe today he's in front of the House Financial Services Committee. And, he's testifying. As soon as he opened his mouth, the market started to rally. So you got to chuckle at this stuff, but that's the power of the printing press.
Yeah, so who's going to win this thing? And obviously the money printers always win.
Well, they win for a time, but, there's a lot of problems on the horizon here. And once the market says enough's enough, then there's really not a lot that the central bankers can do. We're already, I believe they're printing $150 billion a month. That's much, much more than than what Ben Bernanke did when this whole QE experiment first started. The U.S. debt now is going to probably be, after the next stimulus plan, probably around 29 to 30 trillion. At some point, this becomes a problem, and I think that's why we're seeing interest rates go up, because who's going to really want to own U.S. debt?
Yeah, exactly. And that's really what it comes down to. How long can the party continue? And thus we get to gold, silver, cryptos. Got some negative feedback about cryptos, but look, I'm thinking of cryptos, and I'm a big believer. I haven't invested or made a lot of money in it, to my chagrin. But if you were in Texas last week, what good were cryptos?
They were no good, and that's a big fault. That's a big problem with them, is that if you're offline or if you're off the grid, what do you do with crypto?
Yeah, and that's what I want to know, and that's what I think is very real. And you can get, look, the internet is the Achilles heel of the global economy now, and you've got all these cyber hackers. I remember some kid, he was a college student, and he created a worm, which is the old style kind of program. He wasn't even intending to be malicious. He wanted to see if it could replicate on computers across the web, and he was some computer genius. And within like 3 hours, the internet was crawling. It was shutting down all over the world. I mean, that's a type of cyber warfare, but to put all of your eggs in one internet basket, I don't think an internet outage lasts for long, but think of the damage it would do to cryptocurrencies. If just the internet in general went down for a day, it would destroy the economy, the global economy, because that would be it. You and I wouldn't be able to do the show, but particularly, there was nothing malicious in Texas other than the federal government's refusal to allow them to open up additional power plants that weren't carbon neutral. But besides that, there was nothing malicious about it. It was just an act of God, an act of nature, and it kind of showed up a major glaring weakness of cryptos.
Yeah, and you're going to see more cases like this. This isn't, this was an isolated incident, but Texas is a huge state, and I think we could see things like this occur in other places. And you have to always talk about, or we have to remind ourselves that countries can ban this stuff too. They may not accept it. So there's that part of it as well. So again, treat it as an asset class, but I would not treat it as the holy grail here.
I've always said it's an asset class. It's not a currency. Even if Elon Musk says he'll take Bitcoin for a car, it's not a medium of exchange. I can't go buy a coffee at Starbucks and give them Bitcoin. And not that I want to. When something's rapidly increasing, it's Gresham's law, where bad money basically forces out good money. So it's got a long way to go. All these cryptocurrencies do. To actually calling them currencies is really the wrong word, because that's not what they are. And I'm not putting them down as an investment and all that. Every investment has its weaknesses built into it when you buy it, and cryptos are no different. So to say that it can't happen, governments will never do it because corporations are all buying it, I think is naive, and I don't believe in the long run they're going to ban it. And imagine if you got 5 years for possession with intent to distribute Bitcoin, right?
Yeah, there you go. I don't really know what to say, because I haven't invested in either. And people say, where do you put something? I'd rather put it in gold and silver, honestly. I can touch it, I can feel it, and I know that it's been around a long time. And we talk about this all the time, but it's been around since biblical times. It's been the currency of choice. It's real money, and you can't go out there and mine it on a computer and use a ton of electricity. That's the next thing that these globalists are going to do. They're going to say, hey, wait a minute, how can you go and mine Bitcoin? You're using all this electricity. That's no good. So don't think that's not coming down the pipeline soon.
Yeah, no doubt. And that's not to say it's had a meteoric rise. $50,000+ for Bitcoin is stellar, for sure, from its low of 3,500, 3,900, or 3,200. I don't know. It's hard to know what low was. A couple of years ago, I was waiting for it to go down to 2,000, honestly, because that would have been a 90% retracement of its gains from top to bottom. And it fooled me. It never quite got that low. It only got to 85%, but big deal. The next crash is on the way. Hey, how many markets have you seen like this, Nick? Although not maybe that go up this high and this fast, but when they go up parabolic, have you ever seen one that went up parabolic and kept going up and up and didn't turn around?
No, I've never seen one. They always come back. So that's the one thing about parabolic moves and parabolic charts that everybody should know. When you make that formation, you're going to have a big retreat. It's inevitable. It's just a matter of time. It's not it's not it is going to eventually happen. There's no stopping it.
Yeah, because when it rises that fast, it sets into effect the countervailing forces that are eventually going to bring it down. We know
that's right. That's right.
Human
and
nature.
The weak hands are the buyers at the top too. So once they get scared, they just sell with both hands, and next thing you know, it just cascades on itself. So always watch those parabolic charts. If there's one thing you take away from this program, this show, is that those charts always end the same way, back down.
Yep, parabolic always. And I've seen it myself. I've been a victim of it. Now I understand it, and I'm less likely to get hit by it. But even still, it can happen so quickly. Even if you know what's going on, it really becomes hard to get out. Hey, so gold and silver, they're kind of static at this point, right?
Yeah, I mean, we're just doing more backing and filling today. Gold's getting hit a little bit, down about $15 on gold futures. Silver today is actually positive, so it's not up much, but it's flat on the day. So silver just is still a better performer than gold at this stage of the game. And then when you look at gold mining stocks today, they're basically flat as well. So not a terrible day for gold. Not a bad day at all for silver, though. Silver is still holding up pretty well with a flat session.
Yeah, I'm looking at that divergence, and I don't remember. I've been watching these markets for better than a decade. I don't remember them moving over time. Yeah, on occasion you get a session here, a session there, one where silver outperforms gold. But I don't remember ever seeing it for a pretty good period of time where silver gains and gold loses. Silver might gain more, but I've never seen it where actually gold loses.
Yeah, it's not often that you see it, because normally they'll trade somewhat, in lockstep with each other to a fair degree. Maybe a day off here, a day off there, or a percentage or two off here and there. But this is definitely strange, because the relative strength in silver has been there for a while now. So if you just look at a daily chart of silver, you'll notice that price right now trading around 27.70. It's above all of its key moving averages, above its 20-day, above its 50-day, well above its 100-day, and obviously well above the 200-day. When you look at a chart of gold futures, you're going to notice that it's below all of those key moving averages. So that's how I judge relative strength. And silver right now is just so much stronger than gold on the daily chart.
Yeah, it's fascinating to see. And it's just like, I know you don't look at platinum much, but platinum for years, well, always post-World War II traded higher than gold. There was like 5 times where it didn't. And then for the past 3-4 years, it's been trading at a fraction of the gold price, sometimes as low as half. And when you compare it to palladium, forget it. They're not even in the same ballpark. And all of a sudden, platinum starts appreciating. It broke $1,000 up to $1,200. Again, it goes in with the commodity super cycle.
That's right.
But that was an anomalous move that lasted for years. An anomalous move like this with silver could well be on its way to something that we haven't seen before.
People don't realize, but platinum is an industrial metal as well. All right, it's in catalytic converters. It's in a whole bunch of other stuff. But silver now is in almost everything. I mean, you have it. Your cell phone can't run without silver. So it's become an industrial metal as well as a precious metal, and it's in just about everything now. So it's incredible, and even it's being used for medicinal purposes. I use colloidal silver.
Yeah,
so,
same here.
I mean, it really is rather amazing, but you're getting, that demand for it, especially when you see prices in copper and aluminum where they are. I mean, I just had a friend the other day tell me he went to buy a chain link fence, and he's a contractor. He owns a bridge painting company. And he said the fence was 3 times the price of what it was last year. And, we're starting to see all of these base metals, just steel and aluminum and things like that, and copper just soaring. Yeah, nickel another
too.
one. Yeah. So you're starting to see these prices really, really increase dramatically. And, this is where, I think the central bankers come into a real problem. There's something that's got to give here. So when you have these things that people need each and every day, and they're soaring and roaring, but yet, the price of a laptop declines or price of a tablet declines. There's deflation in one end and there's inflation on the other end. But the inflation is where people need it, need goods to survive and to live and to do business. So it's really a problem now. And, I've already waved a caution flag on these markets. We'll see how they play out today after Jay Powell gets off the television screen.
Off his pedestal there, off his throne. Hey, we're seeing copper broke broke $4 a pound. Nickel is over $8 a pound, getting close to $9 a pound. The reason why your friend's galvanized steel fence is so expensive is because zinc has gone way, way up, and that's a crucial element in making galvanized steel. And we're seeing it in so many other things. I'm waiting to see the major food inflation, how much this coming year a Thanksgiving dinner will cost, because that is my best consumer price inflation index, because you got to really define inflation. It's all a matter of what the meaning of the word is. Inflation in the purest sense from Austrian economists is increases in the money supply, and then you have to define money supply. But when you're looking at these increases in commodities, and when you look at your price of a Thanksgiving dinner, that's one thing that they measure the same every year. You don't all of a sudden substitute grapefruit for cranberry, or you don't substitute filet mignon or salmon for turkey. It's the same every year. It doesn't change, and we're going to see a big spike, is my prediction, somewhere 5 to 10%, maybe even higher.
Oh, I would think higher.
Thanksgiving.
I would think even higher. You could just look at. I mean, I do a little bit of shopping with my wife, and she tells me all the time, "Look at how high this is," or "Look at the price increase here. It's dramatic." And you're starting to see it, and that's how it all starts. You start to see these prices rise on things that people need to survive. And again, nobody needs a new tablet or a new television, but yeah, they need to eat. They need to put gasoline in their car. And these are the things that start to hit home, and then that will affect the overall economy. Now, I'm a chartist because I'm never smart enough to figure out the whole story of how the soap opera goes. This stuff takes time to unwind, but the market is always forecasting things of the future. It's always ahead of the game. So, again, you see copper go from where it was in March to where it is now. I mean, that wakes me up pretty quickly.
Yeah, that's for sure. And that's just the beginning of it. Copper, everything that that's the funny part here, Nick, everything that the current administration is doing for our green future is just going to drive the price of copper, aluminum, all of these metals, zinc, you name it, nickel, with the EVs, the electric vehicles, all their policies just driving it higher. Well, that is it for now. Go over to inthemoneystocks.com. Not too late to take advantage of that trade of the decade, and take a look at the Twitter feeds at ITMS, at Nick Santiago01, and at Kerry Lutz, and email us kl@kerrylutz.com. Nick, we ran late, but we'll see you tomorrow.
Sounds good, Kerry. Thank you.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.